Investing is like gambling. They're sort of thinking the stock market is like walking into a casino in Las Vegas, throwing some money down and rolling the dice and just hoping for the best. Hi, friends. Welcome to Market Monday. I'm so glad you've joined us today. So, we're going to be talking about the question: is investing gambling? You see, quite often when I talk to people, they say things like, when you want to invest, just put a little bit in it and forget about it because you could lose it. Invest all the way you can lose because they have the mentality that investing is like gambling. They're sort of thinking the stock market is like walking into a casino in Las Vegas, throwing some money down and rolling the dice and just hoping for the best. And you see, while that could be very true for speculative investments or some kinds of cryptocurrency or other kinds of investment, that is not the case for the stock market and those that have a long-term strategy in the stock market. So let's compare the two, gambling versus investing. And let's use four main criteria. Four main criteria. The first one is this: the strategy. The second, the risk. The third, the history. And the last one, the outcome. So first, with the strategy, when you think of gambling, you're going in there speculatively. You're just trying something. You're depending on luck, to see maybe something could work. Even if you have a bit of knowledge, you are not in control of the situation. In fact, you have very, very little control of the outcome of your gambling. Very, very little control. And your strategy is just luck. Pretty much. That's it. Luck, or you pay somebody to do something for you, which is bribery, you know. But when it comes to investing, you can have a very defined strategy. In fact, there are thousands of strategies you can have. You can go long, so be a long-term investor where you dollar cost averaging every month and just trusting the market is going to continue its upward trend. Or you can go short. You can short the market in the case of a downturn. You could invest in individual stocks. You can invest in ETFs or indexes. You can invest in different things, and you could have a very defined strategy that has proof behind it. It's not just you rolling the dice and hoping for the best. Okay, think about it. There are lots of hedge funds out there, thousands of investment firms. If they were all just hoping for the best, do you think people would put their millions or billions of dollars into them? No, there's a reason behind why people are willing to bet big on the market. It's because there's a strategy behind it. They know their strategy and they've tested it to know that it can work. Now, the second criteria is this: risk. You see, when it comes to risk, gambling is very risky. You throw your dice, you roll the dice, or whatever game you're doing in the casino. It's very, very risky. Once you've paid it, there is no guarantee that you're going to make any money. That's it. There's zero guarantee. If you make some money, you're lucky. If you don't, that's the normal thing. In fact, quite often, the only guarantee is that you're going to lose money. But it's not the same with investing. With investing, you can control your risk by investing in what you know. Your knowledge of the stock market can really, really help reduce your risk. In fact, that's why we have hedge funds, to hedge against risk. There are lots of things you can do in the stock market to reduce your risk. For example, buying the entire stock market. If a company goes bankrupt in the entire fund, you're fine. If there's a crash, you know it's going to recover because the market trends up over time. So risk-wise, you are safe. The reward is going to come because the market trends up over time. Now, number three, history. What is the history of gambling? If you look at it, can anybody tell you, hey, I went to this casino and for the last 10 years, every time I made this play, I had this outcome. Every time I made this play, I made this much money. It's very, very difficult to do that. Very, very, very difficult. You cannot look at the history of the gambling to use that to help you to make predictive bets. You can't do that. Whereas in the stock market, you can look at 100 years of history to see that the market trends up over time. Even when there's a crisis, when there's some volatility in the market, the market trends up over time. You can look at the history of different companies. You can look at Tesla. You can look at where they've started from. You can look at numbers, a lot of numbers. You can look at the PE ratio, right? You can look at the price to earnings ratio, that's the PE ratio. You can look at the TER, total expense ratio, that's for funds or index funds or ETFs. You can look at different things. You can look at the earnings per share of a company, the EPS. You can look at their book, you know, their financial reports. You can look at everything for a company. You can look at the history for as long as the company has been in existence and use that to make your decision as to whether or not you want to invest in that company. But you can't do that for gambling. You go in there and you're just hoping for the best. There's no history to guide your investing. None of that. There's no history to guide your decision making in the casino. Now, the last one is the outcome. In the casino, you cannot predict the outcome. You have no idea what's going to happen. That's why you depend on luck. Luck is your strategy. Hope is your strategy. And that is a very terrible strategy. In fact, look at the people who've won lots of money from the lottery or from gambling. Historically, they often go bankrupt within the next 10 years. Most of them, over 70% of them go bankrupt in a short time, within a decade. So think about it. The outcome is not predictable. You can't say for sure, I'm going to go put my money in this and here's what it's going to do. But with the stock market, it's actually quite predictable. That's why your pension is in it. That's why the government invests in the stock market. For example, government bonds. When you buy a government bond, you know the government is going to pay you back, especially if it's a grade A plus bond, right? Or triple A bond, you know those bonds will be paid back. So if you look at the stock market, you really have to understand that it's really not the same as gambling. In gambling, it's very speculative. The risk is very high. There is zero history that you can use to determine what strategy or what moves you're going to make, and the outcome is highly unpredictable. In fact, I would go the opposite way to say I'm willing to predict that your chances of losing money is much higher than your chances of making money. So in that case, the predictability of you losing money is greater than you making money. But in the stock market, you can have a well thought out strategy, which we often tell people, just have a long-term strategy. Invest every month, dollar cost average. That's it. Just invest every month. That's what goes on with your pension. That's what the governments do. That's what lots of hedge funds do. That's what lots of investors have done, and they do on a day-to-day basis. They go long. They know the market is going to trend upwards. Why? Because the market follows the profit making of companies. In the stock market, companies are working every day to increase their profit, to return value to you as a shareholder. And as a bonus, here is another tip. When you gamble, you own nothing. But in the stock market, when you invest, you own a piece of a company or a piece of thousands of companies, depending on what your investment strategy is. So ownership is another major difference between gambling and investing. So I would like to encourage you all today, don't make the mistake to think that investing and gambling are the same thing. Don't buy into that lie. It's possible. You could say that for maybe some kinds of cryptocurrency. You can't predict the outcome of crypto projects. They can come and go in a short time. They can go boom or bust in a very short time, and lots of them can be scams. But don't go into that mindset when it comes into investing. Do you think Warren Buffett goes into his investing by thinking, yeah, I'm going to invest what I can lose, or this is speculative? No. Do you think Apple does that? Do you think Tesla is doing that? Do you think all these, entrepreneurs are just, I may go bankrupt, I may lose, I'm just trying this out for the fun of it? No, they know what they are doing. They have a plan, concrete plan and strategies that they are putting in place to add value, to take up a huge percentage of the market. And when they do that, you as a shareholder, you benefit quite greatly from it. So those are the biggest differences between the stock market and gambling. So don't make the mistake between the two, because if you do, it will hold you back from benefiting from the stock market. You see, I always say this: the stock market is the greatest wealth building tool that has ever been created, and it does not discriminate. Anyone can partake in it. You can buy a piece of the entire market every month, and you know that you retire a millionaire, or at least you retire much more wealthier than you are today. So I'd like to encourage you, take your first steps to begin to invest in. And if you don't know how to do that, contact us and we would love to show you. Thank you very much, and have an amazing week. Bye bye.